Patron, take them away.
Okay, guys, I'm going to put on a trade based purely on fibs. Why? Been a lot of news today. There's a lot of action that you can see inside it. Trick is to use a faster market, something like the US100 this time of night. It's just gone 6 o'clock, and I've been watching some of the chat, and it's really for Malk, because I want to kind of put it into perspective about chasing markets and looking for X marks the spot. Doesn't exist, and you'll probably find that you tie yourself in knots and it'll blow your mind. Now, talk to Ludwig about it. I had a good chat with him today, and it was based on mindset mainly, and gave him a few hacks and a little bit of chat. X does not mark the spot. Always remember that. It's a bit woolly. Right. If we're looking at a 1 hour, and you can see it's in a decent arena, so it's got plenty of room to get there, plenty of room to get here. At this point, you're at 50-50. All right. So what we have to do is figure out, is the market primed to come down, or is it going to continue to the upper side? Now, there are little things that you can look at. So you look at a Bollinger Band for argument's sake. It's on the outside. It's kind of not flaring massively. That's starting to close in. That's pushing down. So this could easily go up to there. All right. But the premise is roughly down. Look at an hour. Get an idea of the anchor. What's happening on the anchor? Well, the anchor's telling you this is moving down. It hasn't been to the extreme at the bottom yet. Fine. It's pierced here and it's pierced there. So there's a bias. We are looking for shorts. Okay. Take that away. Don't have it too clouded. Why would it be shorting at this point? What can we see here that can help us? Well, there is something that you can see. You can see there's been a move here. It is retraced, and now this move that we kind of in here has breached the tops of said move. Right. How far will that move up? Well, put an extension on. Move started down there, stayed green all the way to there, and then came back. Right. Well, there's the 127 failure. Came down, came back to the tops, came back, and it's now pushing back to that 127. Okay. Excuse me. All right. So if that's the case, it's in an area of attraction. Now, it's either an area to push higher or move down. Well, let's look at 15 minutes. Now, I'm doing this rather quickly because you always seem to want to trade. There is a sustained move. Bottom, top, collapse. Right. Fib. It's coming into the 15 minute. Or the 15 minutes coming into the 23. Drop it to 5. What can we see? Right. Well, we see that it's virtually ready to go. So let's drop that into place. 23 is the target. There is the 38 down in, well, there we are. It's coming in now. There is 50. Right. Simple premise. Direction from the high time frame, using a confluence of the 4 hour and the hour. Look at the market structure of the 15 minute. Looked fine. Gave us an idea for a fib, and then drop it into the 5 minute to monitor. Very simple. Okay. Now here, that's the only position running. No tickets, and you've seen me do that today and yesterday. So what do we do with this? Well, now you just manage it. How do you manage it? Well, you've got a potential movement here. All right. So push this back to 15 minutes while it's doing its thing. Just draw a couple of lines in so I can see what it is that I'm looking at. There we go. 2 target points. I'm quite happy with that. How far is this going to move up if I am wrong? Top, bottom, or bottom to top, back to the bottom, right? Here. So there's an area. There's an area. How far do I want to let this run? Well, don't really want it to go past there too much. Got a big swing point. If we just take this out a little bit so we can see, breaks the tops of here. Where's it going to run to? Well, nowhere. So there isn't anywhere for it to run to. So your fibs are going to be your markers. All right. So we're going to scale it up to here. Simple. There to there. Gives me a grey zone. In other words, where I'm a little bit uncomfortable. Just there. Just like so. All right. Let's put some orders into this. So we're going to sell this up. So there's 25. Take it back down onto there. We'll target the 38 because I don't want to really be sitting in this all night. Put the next one in at the 50. At the 50. Down into a reasonable target. I mean, what do we think? Yeah, 38 is good as any. And then I'll just draw, well, all I'll do is I'll just pull these lines down onto there. I'll pull that one down onto there so I can see where I'm going to put my extra orders in if I so wish to use them. And get rid of that. So that's all nicely mapped out. Targets are in. Okay. What is the ratio? 1, 2, 3. Down to there. Back up. Pretty much 1 on 1. Now if I decide that I want to run this down into the 50, which is there, put that on, it's even greater. So again, the risk profile is in check with the profit profile. I was happy. Just let it run out. Simple. And just leave it to get on with it. If it triggers that, runs down, brilliant. If it doesn't, brilliant. Don't put the money in the equation. Catch you in a Okay guys, let's just hit target. Let's close these off before I forget. There we go. Could have held it on for that, but I'm being conservative. In fact, there you go. There's that 50 crack. Could have had it. Bugger. But what's the moral of the story here? It was planned out. I understood what I was looking for, and I was conservative with the target, and I also knew where the exit strategy was as well. That was very important. It means that the whole thing is planned out, and it was planned out methodically, not X marks the spot. It was reading the conditions. So I really did it in response to some of the messages that I get, and that was real time, right through, no coming off the camera, analyzed it straight in front of you, and then executed the trade. Now, that's all we do as traders every day. You know, you look for certain criteria that you're happy with. Once you've got that direction in place, you just need the reason to get in. In this case, I used a fib. Why did I use a fib? Because it was a strong directional move that I could see a rollover and a collapse that was backed up by two other things. It was backed up by a stretch Bollinger Band that showed the pressure was running out of it. And it was also showing on an RSI that the momentum was starting to shift. So you call it divergence when the price is moving one way and the indicator is moving the other. I'm not big into that, but what it does tell you is the market is about to have some form of shift. And that shift in this case happened to be the downside against a strong move. So what's the best tool in the bag for that? Well, it's a fib. So you just drop a fib on it, enter at the 23, get out the 38 or get out at the 50 and be happy with what you get. The money was never part of that equation. The money is just the byproduct of doing that process. And that's it. So there we go. I'll try and do these real times as much as I can. I'm not a machine, guys. I will put my money where my mouth is. If I flick this back just so that you can see it. No orders, no tickets, and that's that. Done. Complete. So thick end of 400 quid today. Just by being methodical and watching what I'm doing. Have a good night, guys. Catch you soon.